What if I told you that the safest financial move you're making right now, holding on to cash while waiting for the market to crash, is actually the most dangerous thing you can do for your wealth? Welcome back to The Last Read. Today, we are dismantling the fear that keeps millions of people on the financial sidelines. We are diving into Just Keep Buying by Nick Maggiulli, a book that uses cold, hard data to prove that your intuition about money is likely wrong. Let's start with a feeling I'm sure you know well. You wake up, check your phone, and see the stock market at an all-time high. You feel a knot in your stomach. You tell yourself, I can't invest now. It's too expensive. I'll just wait for the dip. Maggiulli, a professional data scientist and COO at Ritholtz Wealth Management, argues that this hesitation is a mathematical error. He compares it to standing at a bus stop. You let the first bus pass because it looks crowded. You let the second one pass because it's noisy. You stand there for hours waiting for the perfect ride while everyone else has already arrived at work. By waiting for a market crash that might be years away, you are standing on the sidewalk while the market moves on without you. Now, you might be thinking, but wouldn't it be smarter to buy at the bottom? This is where the book drops a bombshell. Maggiulli ran a simulation he calls Even God Couldn't Beat Dollar Cost Averaging. Imagine a competition between two investors. The first is you. You just buy stocks every single month, regardless of the price. The second investor is God. This investor is omniscient. They know exactly when the market will hit bottom. They save their cash and only buy at the absolute lowest point between all-time highs.
Who wins? Incredibly, the regular person who just keeps buying beats God more than 70% of the time. How is that possible? It's the cost of waiting. While the perfect market timer is sitting in cash waiting for that dip, the market is usually going up. By the time the crash finally comes, the low price is often still higher than the price was when they started waiting. As Maggiulli puts it, buying the dip is a lie. Time in the market beats timing the market, almost every single time. But this book isn't just about stocks. It's about where that money comes from in the first place. One of the most provocative lines in the book is this: saving is for the poor, investing is for the rich. Now, don't get offended. He's talking about math, not morals. When you are young or early in your career, your biggest asset isn't your portfolio, it's your human capital, your ability to earn. Maggiulli argues that stressing over a $5 latte is a waste of energy. If you have $1,000 invested and you get a 20% return, you made $200. That's nice, but it won't change your life. But if you negotiate a $5,000 raise, that changes everything. The lesson? Stop trying to cut your way to wealth. You can only cut expenses to zero, but your income potential is unlimited. Focus 80% of your energy on increasing your income and just 20% on managing your investments. So you're focusing on income and you're ready to invest. But what about enjoying life today? How do we balance saving for the future without being miserable?
Maggiulli offers a brilliant tool called the 2x rule. Here's how it works. Anytime you want to splurge on a luxury, say a $200 pair of Italian leather shoes, you can buy them, but only if you take another $200 and invest it immediately. This does two things. First, it acts as a brutal affordability check. If you can't afford to spend $400, you can't afford the shoes. Second, it removes the guilt. You didn't just spend money, you matched your consumption with wealth accumulation. You're treating your future self just as well as your present self. Ultimately, Just Keep Buying is a plea to remove the emotion from your money. The strategy Maggiulli proposes is almost boring in its simplicity. Don't look at the charts, don't watch the financial news. Automate your investments so the money leaves your account the day you get paid. Think of your wealth like planting an oak tree. You plant the seed, and for a long time it looks like nothing is happening. It's just a twig. You might be tempted to dig it up or move it, but if you just leave it alone, if you just keep watering it, eventually you look up and you're standing in the shade. The market will crash. It will also soar. You cannot predict it and you don't need to. You just need to show up. If you want to see the charts that prove God loses to the average investor or dive deeper into the data, check the link in the show notes to grab a copy of the book. And if you want to ensure you never miss these insights, hit that subscribe button. Until next time, stop waiting. Just keep buying.